The opportunity to share insights and make valuable connections through networking is an ethos Rockpool Investments has applied to grow its private company investing business. This is one of its Meet the Management sessions that allow potential investors to hear firsthand whether an entrepreneur's plan for growing his business constitutes a good investment opportunity.
If you look at the sector, which is very highly fragmented.
These sessions epitomise the transparency at the heart of Rockpool's concept of network investing. A free flow of information between a community of over 900 investors and the management of investee companies, with Rockpool the interface.
I felt individuals were poorly served. They couldn't invest in successful private companies without going through a fund, with all the lack of transparency that involves, or doing it themselves, which is a full-time job.
Traditionally, you invest in a fund and they take your money away for 5 or 6 or 7 years, and at the end of it they tell you how you've done. With our model, you get a choice of each investment, of whether you want to participate and how much you want to put in, and you can drill down into each investment as much or as little as you choose.
Why is it that we need to keep the lights on? What's changed? And I think there's sort of three reasons. The first reason is the decarbonisation of the UK electricity generation mix. I find it remarkably useful because it's important to get feedback in terms of the way that you're articulating the problem or the opportunity to investors.
The power of the network is felt in many directions, not least in bringing new investee companies into Rockpool's field of vision.
Our network is a great source of introductions. It, if you like, lifts the carpet on opportunities that perhaps aren't fully developed and therefore haven't come to the market of the wider private equity world. It gives us the opportunity to shape to some extent, to see what the managers really want to achieve, what the other stakeholders want to achieve, and to shape our investment. More members there are, the more of these off-market deals that we will be able to find.
One off-market deal is Chicago Rib Shack. The management vision is to transform the brand from the original restaurant in the Knightsbridge area of London into a fast casual dining restaurant chain.
The way ahead for me was to bring it to the neighbourhood and to high street shopping malls at a more affordable level to the wider masses.
The first in the new style Chicago Rib Shacks opened its doors in the Westfield shopping centre in Stratford, and more recently here in the heart of Clapham. In keeping with its principle of transparency, Rockpool took would-be investors on a site visit to meet the management and to taste some ribs.
Rockpool, there was a surprising conversion of genuine interest into investment.
As with many companies in Rockpool's portfolio, Chicago Rib Shack could take advantage of the changes to the government's enterprise investment scheme. Larger businesses with as many as 250 employees and up to £15 million in gross assets can now raise £5 million under EIS every year, rather than £2 million, by offering tax relief to investors who purchase new shares in those businesses.
The changes in EIS tax relief were an important part of the original vision in setting up Rockpool. Those changes, in my mind, expanded the reach of EIS to cover a lot of the successful, profitable private companies that are in the UK. If you link that safer, if you like, underlying business with EIS, then you get really quite an interesting opportunity.
Now IFAs, private wealth managers and private banks are responding to the success of network investing by sending some of their clients to Rockpool. The concept is slowly taking hold, and soon Rockpool will no longer be the lone voice.